Fred. You're with Allworth's Money Matters.
Hey, Scott and Pat. Long time listener of your podcast. How you doing? Happy
Good.
New Year.
Thank you.
Good. I had a question. Speaking of 401k, we were updating, my wife and I were updating our estate plan, and the advisor mentioned, I was telling them my assets, and I want to convert my traditional 401k to Roth to grow some, pay the taxes now so it can grow tax free. So I have about like 1.1 million, but traditional 401k of about $734,000, but it's spread across 3 companies.
Wait. Yeah, I'm sorry, Fred. Say that again. You have 1.1 million, and then you mentioned 740.
Is that an addition, or are you giving us a breakdown of the 1.1 million?
It's a breakdown.
Okay, thank you. So you have 1.1 million dollars in 401ks across 3 previous employers.
734 in 401ks across 3 employers.
Okay.
I have a rollover of $277,000, individual TOD of $40,000, and a Roth of about $1K. And also have a brokerage account of $550,000.
Okay.
So the representative, the advisor.
So that adds. I'm confused. So the 1.1 is retirement assets. In addition to the retirement assets, you have $550 in a brokerage account.
Yes, that's correct.
Okay.
And the brokerage account is invested how? And the reason why we're asking this now because retirement accounts, it doesn't really matter how you're invested. It's all taxes, ordinary income when you pull the money out. A brokerage account, you can have dividends that have qualified dividends that are lower tax rate. You've got capital gain implications. So it's quite. So how are you invested in the brokerage account?
So I have stocks. I do options, calls, and puts. I have for dividends and stuff like that. So kind of like investing.
Okay. What's your question for us?
And do you really quick? Do you have much in the way of gains that you have to report each year from that account?
Yes, significantly.
Okay.
Why don't you do the trading in a retirement account?
Oh, never thought about that. Well, one of them, my retirement account is with Fidelity, and the brokerage account is with E-Trade.
It doesn't matter. E-Trade has.
It doesn't matter.
Yeah. It doesn't matter what the platform is. So what's your question for us?
My question is, the advisor's offering an Agility 10, which is a FIA, which is a fixed index annuity, with principal guaranteed growth from the S&P 500 and NASDAQ 100. And then they said that index returns per year are doubled on both the IRA and then the Roth IRA side. And then also it has a 50% signing bonus, which is given immediately but can't be accessed until the 10th year after the original principal amount is converted from IRA to
you put
Roth.
$100,000 in, they treat it like you have $150,000.
Yes, that's
like
correct.
manna from heaven.
So how old are you?
51.
And are you still employed?
Do I still what?
Are you still employed?
Yes.
And what do you make a year? What's the family income? What's the family income?
$300,000.
And how'd you meet this advisor? Wait. Let me guess. You said you were updating your estate plan.
Yes.
So you went to someone that was doing your trust for you, and they were going to charge you like $1,500. And at the same time, you had to disclose all your assets to them. And once they saw your assets, they made this recommendation?
Yes, that's correct.
How'd I know? How did I know? How did I know? And did you go to a workshop at an IHOP to actually watch the trust?
Yes, exactly. Yes, not IHOP, but yes.
You went to a Mimi's Cafe.
Yeah, pretty much.
Right? It's amazing. I'm kind of psychic. I couldn't think of a less appropriate recommendation for you, Fred.
I totally agree.
I couldn't. If you said, Pat, you met this guy that actually does stock options, puts and calls in his brokerage account. He's 51 years of age. His family income is $300,000. Seems pretty financially.
He invests in. He knows his covered calls, option stocks.
You could actually
he enjoys the trading. He reports a lot of capital gains each year.
You could actually create that same index internally in your brokerage
much
account
less expensive
without actually. This would have.
You understand the mechanics behind it. You actually could.
You could.
And you wouldn't want it.
Yeah. All you're doing is creating callers around that. and you're taking the money and putting it in fixed accounts, and you're taking the proceeds
There
from
are
the fixed
so
account.
many restrictions of what your return is. You're not going to get anything close to
And
the
by the
S&P
way, you don't
500.
get the S&P 500. If you read the contract itself, you get a participation rate in an underlying index, and typically it is capped at a number of 10, 12, 14%. Oh, and by the way, you only get 70% of that participation.
And you don't get the dividends. And they can change the participation rate in the future.
It is, if you said, Pat,
I bet the commission to the agent on, you said 10 years. It's a 10-year surrender
God
charge.
bless him, he went for the whole thing, though.
If you're going to scam.
I mean, this sales guy went for all of it. He was not ashamed.
I bet it's 10%,
Oh, yeah. So,
if not higher.
So look, that is, and by the way, that's probably not the trust.
Why? Here's what's so frustrating. They offer you a 50% signing bonus, right?
Yes.
Whatever that means.
It's made up numbers. You can't touch it. It's made up. There's no free lunch, right? There's no free. It's the only money is it's coming from you. Like there is no signing bonus.
So Fred,
I don't understand why the regulators allow it. And in all seriousness, why do they allow this crap?
I understand. We're talking about Fred here for a second. You take your little screed somewhere else. For now,
It's a joke.
we will have a bonus.
Our industry has a poor reputation, and it's well earned.
We're going to have a bonus podcast where Scott Hansen just goes off on these
No,
index
it's just
annuities.
look.
Look, Fred. So
They're not all horrible and not all inappropriate. This is a horrible one and inappropriate.
So, Fred, all they're using is you have same access to the financial instruments the insurance company does, where you can do callers around. None of it is appropriate for you.
They're just using options.
Yeah, that's all they're doing. So,
And the majority of the money is invested in
but in
treasuries.
saying that, let me ask you a couple questions. Children at home?
No, they're all adults. Well, one a senior in high school, so going to college later this year.
Okay. Home paid for?
Not yet. No. We
I
have a
like the way
student loan.
I like the way you said all adults. I have a senior in high school, and I would not at all think she's an adult.
Okay. So, Fred, you do not, you have no need for this. And I would actually go and read the living trust that they produced before. How much did they charge you for the living trust, by the way?
About 1,500.
All right. And by the way, what restaurant did you actually go to this workshop at?
I think it was I think it was a Hilton sponsored like
The Garden Inn?
restaurant or something like
Okay,
that. Yeah,
got it.
something like that, yeah.
So the whole idea behind this marketing thing is to put these trusts out there at a low cost.
Trust mills.
Low cost, so that they
I didn't even know they're still doing this.
So they get a look at the assets, and then once they get a visibility of the assets, then it's to pitch you these high commission products.
And I bet you that this quote unquote advisor is not registered as an investment advisor, so can't charge you a fee for your service.
And they were not an attorney.
And I bet they're also not a securities license, so they couldn't recommend an ETF to you, for example.
So
Right.
you're
They're an insurance agent.
So in your situation, I think that if you and I were sitting at the same Hilton Garden Inn, I would have actually focused on your placement of your assets, whether the things that you were doing in your brokerage account would be more appropriate to do in your IRA.
Yeah, and you've got 3 401ks at 3 different companies. I assume one is your current employer. The 2 that aren't, I would just move those assets to your rollover IRA. Have them so you don't have so many different accounts.
Gotcha.
Easier to manage.
Perfect.
So you have a placement, and then go through and check the placement of the assets, which is once the money's in the rollover IRA, right? You can do all those stock options, and you can do a lot of the trading. May not do all of it. There may be some restrictions against the instruments you're using, but a large portion of them you could actually be doing in the IRA and avoiding any of the taxes.
Yeah, any of the speculative stuff.
And then in the brokerage account, what you want to do is things that generate very, very little income. So really tax efficient investing. This would be a perfect situation for direct indexing.
Okay.
Yep.
for direct indexing,
or even just the total stock market index,
or total market. Absolutely. But the direct indexing, Scott, I mean, the numbers that you could do it with have come down.
That's right.
Significantly in the last year.
And it's essentially, you understand the concept of an index, I'm assuming, based upon what the transaction here. And so rather than just buying, say, some mutual fund company's index, you use technology that creates an index for you personally. So you end up with a few hundred different stocks. It's all managed. It's only managed to mirror the index. So it's not like there's a big team of people that are trying to pick the best. It's really low cost, but they do great tax loss harvesting.
And so a good example of that is to represent the aircraft industry. They might just own United and Southwest. And if United actually falls in value, they may actually harvest that loss and buy Delta for 31 days and then trade back out again, so that you're actually mimicking an underlying index, but you're doing it very, very tax efficiently. This brokerage account would be perfect for that, and you would understand it. And then
the trading in your retirement account.
And they're trading in your retirement account. And they have them both available at E-Trade. And you mentioned either Fidelity or Schwab. It's available almost everywhere. The platforms, the availability of products is almost identical across all platforms now. So that's what, if I was sitting down with you, Fred, I would say, look, we should spend a couple minutes on the placement of the product. And then I don't know if I would put a whole lot of trust in the trust that was created by the trust mill. I'm trying to use the word trust as many times in one sentence as I can.
Trust it. It might be fine.
It may be fine. I'd go back.
It probably is.
I'd go back and read it to make sure that it was achieving all your objectives. But
Perfect.
You have absolutely run away from that fixed index annuity. Just run away. They talked about all the highlights in it, right? It sounded great.
My guess is the guy selling it doesn't even understand all the negatives in it.
But if you read
They're so complicated.
If you read the contract yourself and actually made a list of the pros and the cons against it, Fred,
you would not buy it.
You would not buy it.
Okay.
But God bless him. He asked for $1 million.
God bless him.
He asked for $1 million. Didn't he? How much money did he ask you to invest in it?
Yeah, about the whole amount.
God bless him. God damn him. I mean, sorry, excuse my language, but for crying out loud.
Well, Scott, he didn't know any better. He was told.
Well, shame on him. You put yourself as a professional in an industry. What about the medical? What if someone said they're a medical doctor? Yeah, I'm.
That isn't the bar. The bar isn't this. You were comparing a life insurance salesman to a medical doctor. Did you just do that?
There are financial professionals that I would say are just as
he wasn't.
as much. I understand
That's
that.
why Fred called us.
I understand that as well.
Right? Fred said, I don't know. Right? Is that what you said, Fred?
Yeah, exactly. I sure did.
Yeah.
Well, I'm glad you called because I think it helps that people highlight
yes,
a number of factors.
Yes, but how was the meal?
Okay.
Chicken. Dry chicken.
Right.
Green string
well, listen,
beans.
you're doing a great job. The only thing I also would check with you, even though the kids are out of the house, is to make sure you had a significant amount of term life insurance on yourself. So
make sure the wife's good.
All right, we'll do.
make sure the wife's good.
Or assuming that maybe the wife's the bigger bread.
Yeah,
we don't know.
Either one, but make sure that you have plenty of term life insurance on yourself. So appreciate the call.